Hello, ladies and gentlemen. I have good news and I have bad news. One of the good news is the hurricane, the big one, is just off the coast of Florida, it's barreling toward Florida. Well, it's almost a Category 5. And you know what? It's making a little bit of a U-turn out in the ocean. And according to the National Hurricane Center, it's going to skirt the coast, most likely, skirt the coast of Florida now, head up toward the Carolinas, between North and South Carolina. And so that's good news. And it's going to weaken while it's heading toward South Carolina. It's going to North Carolina. It's going to weaken. It's going to weaken down some. So that's good news. We also have other good news. The Canadian economy has posted a really nice GDP number. The economy is perking right along up here in Canada. 3.7% GDP, which is not bad. And I'm going to tell you what, so the two economies that are doing pretty good is the United States economy. It's all comparatively speaking. The United States economy and the Canadian economy are doing pretty good, you know. Germany and United Kingdom are not doing so well. They're just keeping their head above water, both of them. China is undergoing a unbelievable slowdown, and it hasn't been reported yet because it's kind of like middle of the reporting area, you know, or where they haven't really reported yet, they haven't really not reported yet, and so the numbers haven't come in from China yet. And China always fudges their numbers anyway. What I mean by fudges their numbers is they move them around a little bit, they make them look a little bit better than they really are, you know, or a lot better than they really are. So we got big trouble coming. Brexit hasn't went away. Still there. And what's happening is Boris Johnson is going to, well, let me just take a look here. It says that crowds gather in London and other United Kingdom cities to protest Boris Johnson's Brexit plan. As Brexit approaches, Project Fear may not be an exaggeration. Boris Johnson, no deal Brexit, the unspeakable in pursuit of the unthinkable. These are some of the news articles that are coming out. And so, as Brexit approaches, and each day that passes now, we're moving one day closer to this deadline when Britain, the United Kingdom, is going to leave the European Union. Now, there's been a lot of fear talk about how it's going to be food shortages and really, really frightful stuff. No medicine and all this kind of stuff, you know. And then there's these ones out there say, oh, it's going to be nothing. It's going to be nothing. It's not going to be anything. Well, I take the opinion that it's going to be somewhere in between. I don't think it's going to be a cakewalk when they leave the European Union. I think what you're going to find happening is, I think that the United Kingdom is going to go into recession. I think that's going to be the net effect. And they are going to see big-time inflation. I think those are going to be the two results that's going to come from this. But also, I think that when the United Kingdom goes into recession from a hard Brexit, I think it's going to carry Germany into a recession as well. These are two massive economies. The resulting spin-off of this is Italy. I think it's going to be the resulting spin-off effect. And Deutsche Bank is going to be the spin-off effect of the two recessions coming, one to the United Kingdom and one to Germany. So then we're going to have Italy start to manifest real problems in the European financial system and for the European Central Bank. And I think then what's going to happen is that's going to trigger Deutsche Bank. I think Deutsche Bank's going to collapse. I can't see this cutting and chopping that they're doing to the bank actually helping things along. And so when's all this going to happen is the day after the 31st of October. So when we move into November, I think that's when the problems are going to start in Europe. I think the carryover effect of these problems in Europe is going to take a month or maybe 2 months to carry over here. And that's when we're going to start to move into a recession over here as well. So we're probably looking at around the recession coming over to our shores somewhere in the new year, maybe in the first quarter or maybe even in the second quarter, depending on what our central bank does. Now, President Trump has told the central bank to do something, to lower interest rates, to stimulate the economy, to bring out new rounds of quantitative easing. Will they do it? We have a lot of big questions here that need answers. So we're moving toward trouble. One of my big concerns, about all this is, as we head into this trouble, is not just the stock market turning down, but generally it's like the domino kind of effect. We have Deutsche Bank is just one of the many dominoes. There's also a big, huge problem in the corporate bond market. Let me just look at this here to explain it. I can't say it any better than this article. This article says it even better than I could put it. It says, heading into this year, there was considerable consternation amongst fixed income experts regarding the fate of BBB-rated corporate debt. Of those bonds residing in 1 to 3 notches of junk territory, these concerns were warranted after all the U.S. corporate debt market is massive. At the start of last year, that market stood at $5.6 trillion in value. Said another way, that's more than 5 Microsoft size. If you were to take all Microsofts, 5 times bigger than if Microsoft went down. It's 5 times bigger than that. Moreover, the percentage of bonds with tenuous grasps on investment-grade ratings has surged over time to 48% at the end of 2017 from 25% in the late 1990s. To make a long story short, the Federal Reserve raised interest rates 4 times last year. Some bond market observers fretted that issuers behind BBB-rated debt could be pinched if the economy slowed, because many of those companies took advantage of the low interest rates. Remember all those years we had zero interest rate policy? They took advantage of that. They borrowed on their companies and stuff, and they've issued this BBB-rated debt, And well, not just a little bit of it, a lot. They took advantage of the low interest rates and issued more debt than and so what'll happen if we get a huge downturn in the economy? Not a small downturn, but a huge downturn in the economy. Well, this BBB-rated debt could be downgraded. Once it goes below BBB, then all of a sudden these fund managers and stuff, F-U-N-D managers that manage funds for pensions and everything like that, I don't believe they can actually hold it if it's lower than BBB. For a lot of these fund managers, they'll have to dump it, and they'll all dump it simultaneously onto the market, and there would be no bottom for this corporate debt. I mean, this is one of our big triggers that we have. It's almost like dominoes within the financial system. What I'm seeing is that some of these, when the recession starts, that these dominoes will start to trigger one another. Like this corporate debt market or Deutsche Bank could trigger this corporate debt market, or the debt market could trigger, or vice versa. It all just happens at once. It all just triggers everything off at once. And you know what the strange thing about it is right now? Most people, your friends, your neighbors, they don't see these enormous problems within the financial system that are just basically ready to boil over. They don't see it. They're completely oblivious to it. While we're marching day by day into this. And you know what? I'm expecting a stock market crash if the Fed doesn't listen to what Donald Trump says and get ahead of it and put themselves ahead of it. If they wait and they delay, like it appears what they're doing, I think there's going to be a market crash. And, that market crash then is going to trigger them into action. But it's going to take, if they did it now, like the old saying, a pound of medicine is worth a pound of cure. An ounce of medicine is worth a pound of cure. If they got ahead of it now, they could push this out a little bit longer. Possibly into 2021. If they got ahead of it now, maybe. I don't know. Maybe they couldn't. Even if they got ahead of it now, but if they really were to start cutting rates big time and go back to quantitative easing and even more stimulus programs, maybe infrastructure programs, maybe rebuild the roads in the United States. Maybe Trump was right when he talked about $1 trillion infrastructure program. Stuff like that. If they did that now, the stock market would go way up over the next number of months. And we might be able to hold this recession off longer. But these other countries that are going into recession are going to drag things down. And so I think we would eventually go into recession, even if we did all those things. We had infrastructure programs and everything else. Still, we'd end up going into recession with the rest of the world, probably in 2021. And I think that an awful lot of the economists out there are thinking 2021, that's when we're going to go into a recession. But in order for that to happen, we would have to get onto it now and not let this go, Anyway, listen, thank you guys for listening. Like and subscribe. Give me a thumbs up. And, well, Monday's a holiday here. Labor Day. I don't know. I might do a show. Maybe not. Listen, thank you guys for listening anyway. And you guys have a great Labor Day weekend. Lots to do out there, barbecues and stuff like that. Oh, I love barbecue. Bye-bye, guys.